With so much uncertainty in the economy today, business owners, professionals, and other everyday people find themselves starving for real solutions that provide a sound financial footing. Our traditional ways of operating within the economy have been challenged. Banking relationships that have been established, sometimes spanning decades, have been called into question because it has become readily apparent that loyalty and a human touch is not part of their business model. So this begs the question, is it possible to not be dependent on banks? The reality is, we must utilize banks for the indispensable service of facilitating transactions. They also provide us the ability to leverage, especially for privileged assets like our homes and cars. By privileged, I mean that the bar is set much lower when using these assets to secure loans. However, that does nothing to address how we grow or create new streams of income. It simply helps us manage our lifestyle. That said, let's take a look at a traditional lending relationship. You'll notice the depositor and lender occupy the same space. That is because it is these funds kept on deposit with financial institutions that are used to expand their loan portfolios for both the financial markets and for everyday loans. What is important to understand here is that ultimately you as the depositor are both the lender and the borrower. This traditional lending relationship is desirable for several reasons. We may borrow because we see an opportunity to increase returns through leverage, or we just want to create more stability by maintaining ready access to cash, otherwise known as liquidity. We may borrow because interest rates are competitive. If they aren't, we may find that the end doesn't justify the means. After all, who wants to take on risk for a small margin while sending the lion's share to the bank? It just doesn't make any sense. Additionally, the institutions must be both willing and able to lend. Many are finding that this is simply not the case. What we often find is that these institutions require 2 years of financial statements, a solid business plan, personal guarantees, or a clean credit history. In that case, we may find that we don't fit their criteria, and that the bank doesn't have an appetite for the loan. Or we may decide that the bank is undermining, through their requirement for personal guarantees, the purpose for which we establish corporations and take business loans to begin with. Part of the reason a bank can command certain interest rates is because they shoulder some of the risk, but many times they're throwing that risk right back at you. So what are our options? We need to seek out alternatives. You might think it would be best to simply use cash or maybe even liquidate an investment to self-fund. But what about leaving the money on deposit with the bank and borrowing against it? After all, isn't that the way the bank lends money? They don't lend your deposits, they lend on your deposits. What we are talking about is collateralization. A good way to think about this is access to capital without sacrificing rate of return. The first thought you may have regarding this strategy is about interest expense. But as with all things finance, we must look for the opportunity cost. Every financial choice we make has a consequence. If we borrow against an asset, do we not also participate in interest, dividends, maybe even appreciation in value, depending on which asset we use? So what tools do we need today to address these challenges? We need access to capital without forfeiting returns. We need the ability to borrow without restriction. We need an underlying asset that is not correlated with the financial markets. We need growth that is guaranteed and earnings that can never be taken back. We need these features to create a self-sustaining financial model to support our investment objectives. At Generational Wealth Partners, we will show you how to build accessible and asset-protected capital. What you do with it is entirely up to you. If you would like to know more, please click the link below. Thanks for listening.